Shortages of crude oil in the commodity market enables the Russian ruble to hold steady against other currencies. Let's figure out what is the reason for such a situation and whether oil prices will resume the uptrend in the future. Stay tuned. Let's start with the news that crude oil inventories in the United States declined again. The EIA's weekly petroleum status report showed that US oil stockpiles dropped for the second week in a row. This means that the ratio of supply and demand has not stabilized so far. However, Brent crude oil remains stable. The benchmark is still trading around the level of $75.50. Probably market participants were ready for shortages of crude oil and did not react to that news. Besides, OPEC and its allies decided to stick to the existing output plan of a monthly hike of 400,000 barrels per day. This means that supply will soon increase and meet demand. Against this background, the level of $74 per barrel acts as a strong resistance that will be difficult to overcome. Meanwhile, other factors will exert pressure on the price, dragging it down to $74 or $73 per barrel. Higher oil prices, as well as the positive outcome of the meeting between Vladimir Putin and Joe Biden, allowed the ruble to gain in value against the US dollar. Currently, $1 is trading at 73 rubles and 70 kopecks. Another factor contributed to the ruble's growth was Russia's annual inflation rate that had climbed to 8.4% from 8.1%. The news was perceived as a sign that the Bank of Russia would consider tightening monetary policy and then raising interest rates. This would lead to a surge in government bond yields and therefore to a stronger Russian currency. In the meantime, the pair is likely to continue trading at the level of 73 or 74 rubles until the end of this week. In your opinion, in such a rate optimal, does the Russian currency have a chance of existing gains? Please share your view in the comments below. Now let's move on to an overview of the gold market. Compared to other trading instruments, this precious metal looks the most stable. Gold continues to trade with a low volatility out of the Federal Open Market Committee meeting. Apparently, investors have shifted their focus to more volatile assets. Therefore, the situation will hardly change until next week. On Wednesday, gold futures showed chunky gains and closed at the level of $1,785 per 3 ounce. The asset is still struggling to get out of a sideways channel and continues to drift around $1,780. If the quote consolidates above this level of $1,800 per 3 ounce, the volume of long positions will increase. Until then, the trend to change is unlikely. Well, here is the forecast from our analysts for Thursday. Analyze the market and make thoughtful decisions. May your trading be lucrative, and see you soon.